All right, everybody. Happy New Year. Welcome back. Welcome back to the Profit Strategies Podcast. I'm Tom Gentile, your host. Glad to have you here, which hopefully is setting up for another year of opportunities. And we have some opportunities with us today we're going to discuss. Joining me again, I had him on last year, and it seems like it was so long ago, but last year was only last week. None other than Mike Wade. Mike, good afternoon.
Happy New Year. How you doing?
Good, man. I mean, we've got a new year. This year has definitely been dramatic, and we've only been at it for a full week. It's been a dramatic year. We'll discuss. Well, I want to talk about what's going on in the overall markets and what my expectations are going forward. I want to, discuss. I got to discuss Bitcoin. I mean, that's like the hottest topic right now. So we'll talk about Bitcoin and what I believe are the reasons that Bitcoin is moving higher, along with a lot of the altcoins. A lot of the smaller alternative cryptocurrency has been moving higher too. But you have some stuff you want to discuss as well. So what's on your plate?
Well, we just the Democrats just got control of the government, so there's some Democratic bulls I'm looking at in the healthcare and the green energy sectors, and then on the bearish side with COVID and the impact on our lifestyles, I'm looking at shopping centers and office space as bears for 2021.
Right. So you say Democrats got control of the government. I got to tell you, by looking at some of the TV images from the last couple of days, I'd say for a short time, Trump supporters, a couple of people got control of at least Congress. I don't even call them. Honestly, I've seen these images, and I don't know who Trump supporters. Maybe not look like some YouTubers. And some social media celebrities, if you want to call them that, were in there posting photos. And yeah, I mean, I hate to see what happened. It's embarrassing.
And it's not smart.
Regardless of what side you're on, it's absolutely embarrassing. Here I am with a lot of my friends saying, "All right, where's that application for citizenship in the Caribbean?"
Yeah, right.
I need to get that going. I need to update that. Anyway, guys, I want to tell you as we go into the new year, regardless of whether you're a Democrat or a Republican, or I like to call myself an independent because that's kind of truly what I am. We are here to spot opportunities in both good times and in bad times. And Mike, you've got some setups for what I like to call both. So let's get right to it. This week, like I said, this week's been really a crazy week. However, if you look at the market and you look at the S&P, for instance, and that's my benchmark, is the S&P 500 or SPY. You look at the start of the week, you look at the end of the week, we're higher. I mean, you would think if you looked at any of the cable news networks, with maybe the exception of one, you look at mainstream media, and you would think we'd be in a free fall in the stock market. The stock market really does lend us an ear to what the economy and what money feels is going on. And money's saying, at least in the stock market, new all-time highs. Even at the end of this week, new all-time highs. I mean, we opened the week around the low 370s in the S&P, and we hit 380 at the end of the week as a high. I mean, that's still a big move. And I got to say this too: if you're looking at Monday, Tuesday, Wednesday, Thursday, Friday, obviously the 6th we saw the most volatility, but the market turned right around again as law and order came back into play, and as President Trump finally, in his own certain terms, admitted defeat. And that's the way I read this. So stock market higher. You take a look at bonds. Now, what did the bond market do? The bond market got crushed. I mean, the beginning of the week, it was kind of holding steady. But you take a look at what happened Wednesday, Thursday, Friday, and the bond market went from well, look at I mean TLT, and I'm throwing audibles out here because I know this is a podcast and you can't see what I'm saying, but you can hear this: 158 to 156 to 154 to below 152. What does that mean? That means that the perception of interest rates is likely to head higher. We've been in this downtrend in bonds, and a lot of people are missing it. The downtrend in bonds, and it could be because folks are getting out of the fixed income, the fixed return, and getting into the stock market because maybe they believe that the bonds and the U.S. dollar have had a disconnect. And if you really look hard at the U.S. dollar, we made new lows again this week that we haven't seen this entire year. Now, Friday we got a little bit of a bump up, and that might have been because of the gap down in bonds, where the dollar appeared to be a little bit stronger. But the dollar is as weak it's as weak as I've seen it in a long time. And so it just, you take a look at the US dollar against foreign currencies, more popular foreign currencies like the Australian dollar, New Zealand dollar. I look at the euro, I look at the Canadian dollar, and they are firming up against the US dollar. And then you look at things like commodities, and this is where it really shines through. You want to know why the stock market's moving higher? Because a lot of value, and we've been talking about this on recent podcasts, that value is going to become the new tech, and value is definitely in play. And you look at even oil companies and oil itself. Oil itself is making new highs. We went from take a look, go back for those of you that want to take a look at a chart, go take a look at USO and look at it from the beginning of November to now. And yeah, your mouth is hanging open just like mine because this is just typically does not happen, especially in a time where demand on oil is down. All right. In a time where we're told still, even though the vaccine's coming out, that we're told if we don't have to travel, don't. It's just safer to stay home. And that all puts expanded supply on things like oil. But then you got the Saudis who came out earlier in the week and surprise, tightened up the reserves a little bit. And that led to a move higher too. But the last few days, we busted out and moved higher. And now we're sitting on 34 and a half. We were at 25 just 6 weeks ago, 25 to 34 and a half. I mean, you take a look at that. That's almost 10 points. From 25 to 34 and a half is better than a 35% jump in the price of oil in just 6 weeks. That's a big jump. Go look at the pumps, right? I haven't put a tank of gas in my car, and I can't tell you how long. It's been a while. But there's going to be a big price difference between when I last put fuel in the tank and when I do it again. And then take a look at GLD. Look at gold. Look at what's happened with gold. Now, gold at the beginning of November is really kind of where it is now. Because what gold's done is gold dropped in the month of November when industrial commodities like oil moved higher. And then gold then started its run up again as GLD was around the mid 160s. And earlier this week, traded into the 180s. And so, yeah, Mike, I mean, even your dog is surprised
Yeah.
at that move. But it has pulled back a bit. But still, everything here shows me, everything I'm seeing is a confirmation that the dollar still looks like it's going to weaken into at least the first half of this year until that vaccine comes out and people start to have a little bit more confidence that they can go out and not catch this virus. And then, there's one more chart that I look at quite a bit, and that's a chart of the VIX, or in this case, I look at VXX. And VXX, if we were to look at that over the last year, obviously the big moves in volatility happened in February and March when we saw this thing just jump from the 15-20 area is really, it gets cheap. We jumped as high as 75 last year. And then we started that move to the downside where we saw lower highs, lower lows, et cetera. What's going on right now is actually the only bit of that concerns me of this market is that we're back down to 16 and a half on the VIX, on the VXX. And we were below 15 when the trouble started last year. So that's my early warning indicator to everybody listening to this podcast. Things look great, but things always look their best when the ship is ready to turn. And although we're not down at the lows we were this time last year on the VIX, we're getting close. What's the alternative? The alternative, I think, that's happening with a lot of folks is this move into cryptocurrency. And there are a couple of reasons why I think cryptocurrency is continuing to move higher because the volatility is there for a pullback. It's been there for at least a week as we moved, above 30,000. And then we wiggled back and forth between 34 and 28. And then we ran up and now we're hitting low 40s. I mean, my target this year was 50,000 by the end of this year. I didn't think it was going to happen by the beginning of this year, which is very well possible. And so I'm going to let all of you know on my podcast right now that next week on my YouTube channel, I will be doing some updating on my new outlook for Bitcoin and what I call the top three cryptocurrencies, the top three that I own as a long-term investor, and where I see each of them going. That's going to be next week. I'm going to be putting that on the YouTube channel. But I mean, I'm looking at it right now, and it looks like a rocket ship that's actually starting to accelerate to the upside. Volatility is very high. Where's the next area of resistance? Where's the next area of support? Plenty of that I'm going to cover in visuals next week. But why is this happening? Well, I think it's a combination of things. The adoption of cryptocurrency into mainstream. PayPal started it, but you're going to see a lot more of this coming. You've also got retail investors have got FOMO right now. They're buying in now because now they have the ability to do it through areas like PayPal. And then you've got, I think, a lot of the social unrest that happened earlier in the week, Mike. I think that has a lot to do with it. And if you take a look at, you can go out there on the internet and you can find stories everywhere. And one of the things that paints a really gloom picture is the Drudge Report. So if any of you ever, and I don't go to this often, but I decided to look at it today for the podcast just to see what's up. And drudge.com is one of those, I mean, it looks like a newspaper when you look at this. Not a lot of you are going to look at this for very long because it just doesn't look appealing. It's kind of like the Craigslist of news. And you'll see the top, I'm looking at it today. Cop dies after defending Capitol from Trump thugs. Then you look over in the left-hand column, and it says, remember the sedition of Trump, Hawley and Cruz. 4-star general assures troops that America's Constitution remains our bedrock. And it just goes on and on and on. You go down the left-hand side, you go down the middle, and you go down the right-hand side, and it is literally 100% what happened in D.C. this week. And so it's just an entire news story of social unrest. And if you don't believe that people are moving into the digital assets because of social unrest, I think that's where a lot of retail is going. And that's it. And then, those are the top three things. And don't forget about the fact that this is a finite currency, that no government on earth can print more Bitcoin. Bitcoin answers to no one. There's no CEO. There's nobody. There's nobody to sue like what's happening with Ripple. And therefore, people around the world see this as digital safety. And I believe that's what we're seeing. And then you get the price target. JP Morgan came out with a really weird price target this year. They see 146,000 on Bitcoin. Now, I've seen these guys throw these out here before. And I'll go through and I will confirm or debunk that number next week. But it's definitely getting attention from everybody. So, I think now at this time, Mike, let's move back to the stock market for a little bit, and let's talk about what you see on the bullish side and what you see on the bearish side. So I'm going to shut up a little while. I'm going to let you talk.
Okay, great. Well, thanks a lot. I really appreciate the opportunity to spend some time with you, Tom. So, what caught my eye this week was when the Democrats got control of the Senate, we now have essentially a Democratic government. And what that means is that the planks of the Democratic platform are going to receive a lot of attention. And the two areas that are really hot right now, in the last 5 days, these two sectors have just taken off. One of them is healthcare. Of course, healthcare, we have COVID that's going on. We have healthcare programs. So there's a lot of money flowing into healthcare right now. In fact, the sector spider ETF that tracks healthcare, the stock symbol is XLV, as I speak, has set an all-time high today.
I
So
see
money,
that.
yeah, money is clearly flowing into healthcare. So a trade on XLV would be a smart one. I mean, if you look at what's happened 3 days ago, it was trading at 111. It's now at 117 or so. It was a high of the day was 118, just shy of 118. So it's clear that money's flowing in, and that in and of itself would be a really good play for the next quarter, I'd say, at least, maybe for the rest of the year. So healthcare is really hot. Now there's two stocks in the healthcare sector that are really aligned very well with governmental programs. One of them is Centene, and the stock symbol is CNC. And Tom, you know what Centene does is they provide services for government-sponsored health plans. No
Wow.
brainer. So that one I like. That one gapped up the last 3 days from 62 all the way up to 70. That's an
Oh,
eight.
yeah, I see it.
Yeah, it's hot.
10% move.
Yeah,
10% move in a week.
yeah. Even less than just 3 days. Yeah, as soon as the Democrats got the Senate, this popped. So that's an awesome one, but that's not the best one. It's a great one. But the one I really love is Amerisource Virgin. The stock symbol is ABC. And what they do is drug distribution services. Isn't that something we need right now with the COVID vaccine?
Yeah.
ABC right now is at an all-time high. It's gapped up in the last 3 days from 100 or at 112, a 12% move. Three big moves in the last 3 days, and right now, as I speak, we're at an all-time high. So those three in particular, Tom, are for me, hot stocks for the next, at least, I'd say 6 months to a year, and maybe longer.
Yeah, yeah.
So that's one area that I think deserves a lot of attention. The good news, Tom, is that the options are cheap on these. They're not expensive. So buying 60, 90-day call options would be a reasonable move on these things.
Yeah, let me remind everybody too that typically when a stock goes up, or in this case also the Spider Select, that typically bodes well for option prices. You would think the option prices are going higher, and numerically they would be, but in terms of volatility, they're actually quite cheap. When you look at them versus, let's say, back in March or April of last year when XLV was trading down around 75. The other thing I want to mention is that if you're new to XLV or Spider Selects, just check out the YouTube video I did last week, because I did a whole update on all 11 of those. I call them the X Factor securities, X Factor assets, and so I did a big piece on that. And talked a little bit about the options premium on those as a whole. But yeah, Mike, I'm with you on that. I mean, what a big move! And how disappointed? I mean, I'll tell you, I'm disappointed that stocks like Pfizer just really haven't got off the move yet. I think Pfizer's going to be one of those sell the rumor, buy the news, and they're going to have to post some real numbers in their upcoming earnings reports to see a Pfizer stock go higher. And for Pfizer, what I've been doing is I've been selling the premium because of its sideways market movement. That's what's been working for me. But yeah, I take a look at CNC like you're looking at it, and I mean, that's a definite breakout move that could be just the beginning.
Especially considering what they do. Health government, government health program support services. It's really lined up for what's happening in our government. The
Yeah.
the
So
other
you have some bears too, don't you?
Yeah, let me just, yeah, I do. I want to say one thing about, there's one other opportunity that's, I call it the Democratic bull. One of the other Democratic bullish sectors is the green energy sector. And
Oh yeah.
there's actually an ETF, Tom, called ICLN. And that, as I speak, set an all-time high today at 34.
Wow.
And there's a particular stock in that group that is leading the charge in its N phase. ENPH is the symbol. Enphase yesterday set an all-time high. So they provide home energy solutions to manage green energy service, green energy. So both of those two are really loaded for loaded for bull, I should say.
Isn't that amazing? I mean, and these I'm looking at ICLN right now. This thing's up 400% from the lows of last year, better than 200% from the highs of last year. Um, it the trajectory of this thing almost looks like Bitcoin, and you gotta ask yourself, okay, the stock's $33 roughly. This really does look like an option trade more than a stock trade because of how fast it moved up. There's got to be some risk in this. I mean, obviously the long term makes sense, Mike, but there's got to be some short term risk in this thing. Don't you agree?
Yeah, absolutely. The way that you could trade this is to sell. I mean, this is an advanced option strategy, but to sell credit spreads at maybe 180, make money above 180 or 200 as it breaks
Right.
resistance. That's a common methodology I use to trade some of these wild stocks. But that the implied volatility is pretty reasonable. It's still a little high,
Yeah.
but I'm with you. I mean, this could pull back 20 points in a heartbeat. So you got to be a little careful.
Yeah. Yeah. Hey, tell me about COVID and the COVID bears you're looking at.
Yeah. So the source of these, I was just doing some thinking, and I went to the shopping mall. I don't know, 2 months ago, and it was like a ghost town. I'm not a big shop. I don't like to shop that much in a store, but I went there to the Apple store to do some Apple stuff, and the mall was was a ghost town. And it makes sense when you think about people are avoiding doing their social distancing. They're shopping from home. They're not going to the stores as much. I walk down my street here where I live, and there's, I'd say, 25% of the stores have shut, and that's the case for shopping malls. So
Oh yeah.
you've heard of Simon Property Group. They're
Yeah.
really the largest mall REIT, real estate investment trust, and that stock has just been
What's
floundering.
the symbol?
I'm
Isn't
sorry.
it like SPG?
Yes, Simon Property Group, SPG.
Yep, got it. Yeah, oh yeah, I'm with you on this one. I mean, if you take a look at the long term chart, last year nearly $150 a share. Then you saw the huge drop down. I mean, boy, the market really got that one right immediately. But I mean, it fell too far too fast. But what's really interesting is this stock went from 150 down to near 40, and then it ran back up to almost a 50% retracement, and it was nearly there just couple of weeks ago. And this one really does look ripe for a breakdown.
Yeah.
It worries me that this might be the beginning of I don't want to call it the end, the beginning of a shift for commercial property, especially commercial property that involves retail, that also involves office space. I think the commercial property might even have an issue because we're seeing more teledocs. We're seeing more, I mean, my wife does more of her doctor's appointments on Zoom than she does going into an office. Although it's quite funny that it still takes her the same amount of time. You still need months for an appointment in some cases, but now it's an online appointment. But yeah, I mean, to say this one's not going to fall, from the area it is now, maybe another, 20 points. I think that's highly likely.
Yeah, especially Tom, if you look at it's trading right at 95 resistance, which was the last attempted rise. It bounced off 95. It just did it almost recently. So we've got really super strong resistance right above the stock. So it's not likely to break through that, particularly given shopping malls are taking it on the chin. So I
They
think
certainly
it's a
are.
really great setup. And as you pointed out, Tom, a lot of people are working at home now. I'm one of them. I've always been one since I quit my job in '98. So I've always worked out of my home, but more and more people are. And there's a company called Boston Properties, and what they do is they acquire, build, and manage office space. Look at the stock. The stock is it's been moving pretty much sideways since April, and it's channeling a little bit. But as we look towards companies beginning to have their employees work out of their homes, we can anticipate some the negative impact on the office space revenues. So
And what's the symbol? Can you share the symbol with us?
yeah, sure. It's BS Boston Scientific X BSX. It's a bit of a channeler now, but I see it dropping down to 34, 32 pretty. That's currently at the 50-day moving average at resistance. It looks poised for
Yeah.
it to pop down to 34 or 33 from here.
What's funny is, I look at these charts all the time. When you look at a 5 minute bar, you'd say, "Wait a minute, this thing's going straight up." So for those of you that are at home and you're typing these things in, go to the day chart and look back a year, and that gives you a better overall picture of what happened initially when we first learned of the virus, the rebound from that, and where we are now. So awesome stuff, Mike.
Great. Yeah, I'm excited about these. These are. I'm going to send these over to my mother. That's my litmus test if I really like them.
Hey, well, you know what? Word to your mother.
There
Right?
you go.
Hey, thanks for joining us and being part of the Profit Strategies podcast. And folks, we will be back again same time next week with another edition. We'll see how the middle of the month is shaping up. And we're going to have to be doing, Mike, when I get you back on here in a couple of weeks or so, we're going to be talking about earnings. And
Mhm.
we'll get to share some earnings projections or what we see, maybe some earnings patterns. We can talk about earnings patterns and stocks that typically go up into their earnings report, and stocks that typically go down into their earnings report, and that'll be a lot of fun. So I'll be inviting you back here as we get closer to the end of the month.
Excellent.
All right. So
I
thanks,
look forward to it.
thanks again for joining us.
Oh, my pleasure. It's always a pleasure to hang out with you, Tom.
Awesome. All right. Well, thanks everyone for listening to this week's Profit Strategies podcast. You know where we are here. You can catch us every week. We'll see you again soon. Bye now.